Hey Investy Besties, welcome back to the channel. If you're new around here, welcome. My name is Shalise. My husband and I are on our journey to achieve financial freedom, and we're documenting that here on YouTube. So if you want some motivation, some inspiration, make sure you like, share, and subscribe. I am not a financial advisor or fiduciary. I'm a regular mama, wife, and worker bee trying to get there, a regular person in the trenches investing. So I'm hoping that you'll take the golden nuggets and apply it to your journey, okay? And always beware of scammers and fake pages, bots. They're always around, so always confirm via my email, mommytradertube@gmail.com. So today I have a requested video. So I've gotten some questions from a couple of people that are expecting tax refunds. I was actually surprised they were coming so quick because we don't even have all of our tax forms and everything. But they wanted to start investing. They're ready to kind of hit the ground running, and they're beginners, and they just wanted to know not just where to start, but researching some tips. And all of my seasoned investors on this channel, you know who you are, leave some tips down below for them as well. It's important that we share, some of the do's and don'ts, because we want people to remain on this journey for the long term. Okay. So before I get into the meat and potatoes of this video, I'm going to share with you all a clip of a video that I did. It had to have been about 3 years ago now on the channel, where I shared 5 beginner investing tips, some books, Roth IRAs, all that good stuff in that clip. So I'm going to share that now, and then I'm going to come back here and we're going to go through this article with Fidelity, because they really break it down, and I love using Fidelity and all the account types that they have. So let's check that clip out, and then we'll come right back here. So I am here to share 5 beginner investing tips for you guys. Again, these tips are going to be super simple and super easy. I am not going to make it complicated, okay? So the first tip that I have for you guys is to change this. Changing your mindset when it comes to money is so important. It's not even just investing. If you want to buy a house, if you want to grow your net worth, if you want to become a millionaire, maybe leave money for your kids and your grandbabies, changing how you view and approach money is so important. And I always tell beginner investors to just start with one of 3 books. So I love The Rich Dad, Poor Dad. I love The Richest Man in Babylon, and I love The Psychology of Money. It really helps you to have a different perspective when it comes to how money works, to understand how money can be a tool for you. So I always say, take 30 minutes out a couple days a week while you're driving home, while you're cooking dinner, if you have some downtime while you're cleaning the house, and listen to these books. And let me tell you, you don't need to buy these books. Go to YouTube, type in The Rich Dad, Poor Dad, and the audio book will come up. And that way you can listen to these books and not have to pay a penny. The second investing tip that I have for you guys is just to have some basic education and knowledge when it comes to the investment world. Now, it don't have to be complicated. You just need to know what a stock is. A stock represents simple ownership that you have in a company. You are part owner when you have a stock in a company. The stocks are also known as shares. So you can have 100 shares in, let's say, McDonald's, 10 shares in McDonald's. You can even have $10 worth of a share in McDonald's, and you are legally considered part owner. And I want you guys to understand, you don't have to have a whole lot of money to invest. So a fund is just a basket of companies. So instead of just owning McDonald's, you can also own Amazon and Target and Walmart and Tesla and the Dollar Tree. And the great thing about this for beginners is that it really limits your risk. So let's say McDonald's kind of falls, the stock just falls. Well, you have 20, 30, 40, 100 other companies in that fund, keeping your portfolio, keeping your balance, keeping your money afloat. So I always love funds for beginner investors. And there are 3 types of funds: mutual funds, index funds, and ETFs. Simply, mutual funds are usually associated with company-based retirement accounts. So your 401k, your 403b, things of the like. Index funds and ETFs, which are exchange traded funds, are very, very similar. The main difference between them is that ETFs can be bought and sold throughout the day like a stock, and index funds can only be bought and sold at the end of the day, whatever that price is. So yes, you want to just know basic terminology when it comes to investing. Some of my favorite websites are Yahoo Finance, MarketWatch.com. In terms of like YouTube, I love my channel, of course, is very beginner friendly, The Minority Mindset, Our Rich Journey. So the third tip that I have for you guys is how to find stocks and funds. So it's not as complicated as you think. I did give you a couple of examples in the previous tip, but I always tell people, as you're learning, if you are a beginner investor, be an owner and a consumer, you would be surprised at how many companies you eat or take as medicines, maybe visit on vacation or going out to dinner, companies that you wear and drive. I always tell people to pick a room in their house. So if you go in your kitchen, for example, you are eating and drinking so many companies. Pepsi and Coke is traded on the stock market. General Mills and Kellogg's is traded on the stock market. Oh, you bought your new refrigerator from Lowe's, Home Depot? Both of them are traded on the stock market. Is your refrigerator a Samsung brand? Oh, sis, Samsung is traded on the stock market. That is how deep this gets. So I always tell beginner investors, start with what you own. The fourth beginner investing tip that I have for you guys is brokerages or platforms. So there are tons of them. You have Fidelity, Vanguard, Robinhood, Charles Schwab, M1 Finance. You can even invest with Cash App, guys. Cash App. There are tons and tons of companies out there that you can use to get access to the stock market where you can buy and sell said stocks and funds, okay? And the fifth and final tip that I have for you guys is probably going to be the most complicated one, and that's be patient. You got to be patient. I know you want to be rich by next Friday. I want to be rich by next Friday too, sis. I'm not even going to lie to y'all. But that is not how it works for 99.9% of the people that invest. Yes, you may come across videos on YouTube or social media that will tell you, oh, you can put $1 into a company and you'll have $10,000 by the end of the week. Or the stock will go up 1,000% by next Monday. I'm telling you guys, that does not happen. Rarely, if ever, does that happen. And what you're falling prey to is manipulation. And I want to make sure you guys understand that you should always buy and hold good companies, even when the stock market is red. It's also good because of taxes. Yes, government will tax you on any gains that you make in any of your accounts outside of the Roth IRA. And let's say you're thinking, okay, I have a retirement account, I want to open up something else. I always tell beginners to start with a Roth IRA, okay? An IRA just stands for an individual retirement account. Open up a Roth IRA. Roth IRAs can only be funded with after-tax money. So that's money already sitting in your checking account. That money has already been taxed. So take a couple dollars out when you can and put it into your Roth IRA. You can open up one with Fidelity, Vanguard. You can even open up one with M1 Finance. And that way, all those gains in that Roth IRA grows tax-free. And the max that you can contribute to a Roth IRA is $6,000 for 2022 or $7,000 if you are age 50 and older. So again, guys, thank you so much for having me here for these few minutes. All right, guys, welcome back. So if you are a beginner and you were watching that clip, I hope that it gave you like a good starting point. Remember, when you are investing, especially as a beginner, it's a lot of information. I mean, this is stuff that people go to school for. And even outside of that, it takes people, some people like myself, 2 years to really absorb all of this information that we're learning. It's like learning a new language. And so take your time. You don't have to kind of get all this overnight. You want to really start slow and steady with the basic things. You don't need to know every single metric and every single thing about a stock or an ETF, just the simple things. And you start from there while continuing to educate yourself. Okay. So it doesn't have to be complicated when you are starting to invest. And we're going to talk about that right now. So one of the things that I love about what they said in this article is to figure out what you are investing for. You see step 1 right here? Oops, it's highlighting everything. But right here, it says step 1, figure out what you're investing for. I made this mistake when I first started 10 years ago because I was so focused on the number. I was like, of course, everybody wants $1 million or something like that. That's like the number one, number that everybody has in their mind. But I love that Fidelity forces you to think about, what are you doing this for? Why are you doing this for? Because that will be the motivation you will need when the markets pull back, or if we are in a recession, or just anything economically happens, you need to have your why. You need to know why you're doing this so that you can hold on to that thought. So down here, it has a couple of options. So some people want to invest for the ultimate family vacation, right? Some people have a desire, when they're fully retired from their job, to take their entire family to Hawaii or to Disney or on a European vacation, all expenses paid. But that takes money, right? And it takes time. So that's like a why for some people. Other people want to buy a house. Other people want to save for their children and give them a gift, for a wedding or to help them with a down payment on a home. So there's a lot of reasons why, even in addition to just saving for retirement, right? Maybe you want to take a sabbatical, maybe spend a year backpacking through Europe, or you want to take a year off for your mental health or to build up, a side hustle. Or let's say you got sick, God forbid, and you needed to take time off. Those are all reasons that people like to invest. And so you can invest for all of those things or just pick one or two. The choice really is up to you, but that is your why, okay? Now, as a beginner, step 2, account type. There are so many different types of accounts when it comes to investing. If you come under here under products with Fidelity, these are all the different types of accounts that they have. Retirement accounts and IRAs. They have spending and saving accounts, investing and trading, mutual fund, crypto, CDs and bonds. I mean, it's so much. Annuities, 529s, HSAs, life insurance. It's just a lot, right? So as a beginner, I will always suggest just start with one of these 3 right here. You see right here? A brokerage account, or a 401k or a 403b, depending on what your employer offers, or an IRA. So there's Roth IRA, traditional IRA. And before I move on, if you're a beginner, I have a whole playlist here, a whole playlist taking you step by step through the stock market, building your portfolios, paying taxes, all of that stuff, which is important. So take some time. I have several playlists, and just watch some of the videos where I can take it, a little bit slower for you. But definitely you have 3 simple accounts. I would honestly say, if you're a beginner, start with your employer sponsor. Go down to your HR, admin department and ask them about, the company's retirement account. Is it a 401k, a 403b, a 457? And how can you open one? They will help you to do it. They will open it for you and they will get you started. Okay. And here are some of the pros and cons to it. So I love that with brokerage accounts like Robinhood, M1, oh my goodness, Cash App, etc. You can open it on your own. It is taxable though. So that money will be subjected to taxes. But guess what? It's no restrictions on withdrawals. But with the 401k, there is a restriction. You got to wait until you are 59 and a half. Same with the IRAs, Roth IRAs, which has a cap on it for 2025. I believe it's $7,000, $8,000 if you're over 50. But there's caps on what you can put in a Roth IRA, and there's restrictions on withdrawals. So step 3, you got to open the actual account. Okay, so you have your why, and you figured out what account you want to open, like a 401k. So now you got to actually do it. You got to tell your employer, yes, for example, I want to open up a 401k, especially if you get a match. No, you don't have to rush and try to max it out, but rather just try to put in the match. So if you get 3% match, try to at least put 3% in your 401k to match that. Okay. And you can, again, open it several places. Our 401k is with Fidelity. It depends on your employer, but yours could be at Vanguard, Charles Schwab. It just depends on your employer. Sign up with on the website, because you can actually view your portfolio online yourself, and you just tell your employer how much you want to put in. $25 a paycheck. You can start there. It doesn't have to be a whole lot. They will probably put you in a target date fund. Most people have target date funds. We have a target date fund. It just depends on the year that you may retire, quote unquote. Excuse me, guys. And it is managed for you, so you don't have to actually manage it yourself. Okay. Again, beginners. And I love that it has a little image here about, if you can put at least 15% of your income in. And the great thing about a 401k is that you won't even see it in your paycheck. It'll all really be taken care of for you. Okay. Step 4 is pick investments. Okay, so with a 401k, you don't actually have to do it. Now you can, but if you're a beginner, usually the employer will have a fund manager that's responsible for that, so you don't have to worry about that. But if you open up, for example, a brokerage account or an IRA, you will have to pick your own investments. Stick with an ETF or an index fund if you are a beginner. You don't need to pick individual stocks. You want to make sure you are diversified, you're safe, and the risk is lower. That's why I like VTI, FXAIX, SPLG, SCHG, FXAIX. There's a lot of great ETFs and index funds that are diversified, gives you access to great companies, pays a dividend, and it lowers your risk. Okay. You could just buy just one fund versus trying to pick individual stocks. Again, as a beginner, we want to make sure we just keep it simple. And then the final thing is just buy them, right? Once you open the account, you actually have to buy the investments. It does not help if you have your investment money in cash. It does not help if you have your investment money sitting in your investment account, but it's not in a stock. Your investments, in order to be considered invested, must be in a security, okay? It has to be invested in the actual market. So once you buy that, look at step 6, relax and just keep tabs of it. That's why I have a 2025 investment planner. It comes with 3 spreadsheets. Thank you to the hundreds of you who have purchased it. It's something that I made, that I created. It was a labor of love that I have professionally printed for me and shipped out to you, the physical planners, priority mail. So, it really helps you to stay on track, to manage. It helps you to really learn in real time and just help you to be consistent. That's the key to all this. Not perfection, just consistency. Okay. So again, simple, easy video for all of the beginners out there. Conversational, where to start. I didn't give you a whole lot of charts and metrics and all of that because honestly, as a beginner, you don't want to be overwhelmed. You just want to have a good starting point. So read this article, check out my beginner investing 101 playlist right here. Grab yourself the dividend planner that I have. And that way you can kind of get started. You can be consistent. You can use your tax refund wisely, and you can actually put you and your family in a better financial position moving forward. Okay. So thank you guys so much for watching. Make sure you like, share, and subscribe. Smash notification button so that you don't miss an upload every time I post a video. And if you need some private help, like private 101, check out the information in the description box below. My website is there. Again, thank you so much for watching. And until next time, I'll see you all in the next one. Have a good one.